Hey traders and investors, it's Serge Berger here. I think General Motors has reached an area of confluence resistance that should be respected, particularly because it does coincide with the broader market looking a little bit exhausted here, at least for the near term. Let's have a look at what I mean. First of all, if you look at General Motors, here on the weekly multi-year chart, what you'll see is that essentially ever since topping out there in 2013, we have had a somewhat well-defined range that the stock has bounced inside of, and we are now basically at the midpoint of that channel. So I think risk reward, at least for the intermediate to near term here, looks to be a little bit better on the downside. We need some more consolidation here for the stock to push higher, as far as I'm concerned here in the near term. So let's have a look at what I mean. If we go back and use a real simple 50, 100, and 200 day moving averages, what you can see is that the stock is now reaching an area that's quite interesting, with a bunch of confluence things coming into place. So let me just quickly go in and get rid of that 50-day moving average because it doesn't really pertain to the analysis here. So now we're left with a 200 and 100-day moving average, which is the red and blue respectively. And what you can see is one of the things you always want to look at is, for one, you want to look at things in multiple time frames, but you also want to look at things where sort of multiple things come together. The more technical parts and news bits and fundamentals stuff come together at one spot, the better your odds will be of a successful trade. So basically what we're seeing here is that General Motors right now has rallied back to its 200 and 100-day moving averages, confluence resistance of those two moving averages in more or less a straight shot along the broader market, and it looks to be quite exhausted here. Also from a momentum perspective, which I don't have any momentum indicators here, but we are quite overbought. If we then draw this horizontal resistance line, you can see we used to be have support here. Then, well, first it was resistance, then it became support, then we broke below it. Maybe it's resistance again. Once again, here there's also a potential head and shoulders pattern here, which I would not take too serious, but I know some people like to look at that. So just so you know, there is that as well. So lastly, if we do a Fibonacci retracement, you'll see that we are more or less right at a 50% retracement from those highs in November of last year down to those February lows. So we're retraced about 50%. Lastly, if you go in even closer on the chart and you use a real simple 8 and 21 day moving averages, you can see that the stock has become somewhat extended above its 21-day moving average, but also that it's more or less held for the most part on a daily closing basis above its 8-day moving average ever since breaking above it here in the middle part of February. And that's a fairly extensive streak. And I know we had marginal close below it, but they were all with long bullish tails, or yeah, bullish reversal tails. So we haven't really had a decisive close below that 8-day moving average. So I think if and when we accomplish that, and for all I know, maybe it's today is the day, that could be a setup to start leaning short this stock, at least for a trade. We also had a failed rally attempt up here on the 18th of March, and we just need a confirmation selling day to sort of confirm this potential bearish setup for the stock to move at the very least back into those low 30s for now. So I hope this makes sense, guys. Please like the video. That's how I move up in the YouTube ranks. Subscribe to my channel, and I'll see you in the next video.